In money matters, the JSE was firmer this morning, while its global peers were mixed as concern mounted that higher risks may tip the global economy into recession. Lesedi Mabuza, Sentio Capital equity analyst, joins us now for the latest market moves. A happy Friday to you, Lesedi. Is that sentiment reflected on the markets at midday trade?
I'd definitely say in our markets it is being reflected. You are seeing the JO share up in the green by about 0.15%, and it looks like it kind of looks like it's set to end the week on high. But in terms of what's influencing our trade, even though you've seen the US in the red for the past 3 days or so, you are seeing China doing really well and keeps on rising, and that's mostly due to the prospects from better economic activities as they've let go of the zero COVID policy going forward. And that's mostly spilling over into our markets, as you're seeing them in the resource markets and in the industrial markets, which are doing most of the heavy lifting this morning.
Sure. Mr. Price, in company news, their latest interim results jumped 49.3%, its highest third quarter sales in its history. What's influencing that?
So Mr. Price this morning released their third quarter results ending 3 months ending 31 December. And in those numbers, you did see retail sales the highest it's ever been in the history of Mr. Price. But it was mostly influenced by the recent acquisition of Studio 88. Excluding the acquisition of Studio 88, retail sales increased by 1.2%, with clothing contributing about 2.2%, and the home segment declining by about 3.2%. Now, looking at the whole of Mr. Price is majority a cash retailer, and it is majority a cash retailer, with cash sales being mostly about almost 90%. And in these results, they did flag that consumers are looking to more credit purchases, and this is as consumers' disposable income is reducing due to higher inflation, higher electricity, and just higher cost of living. So you are seeing that in their results, consumers are on the look for more credit purchases as they struggle to get money. And just with the stock, it is down 9% on these results this morning.
Yeah, announcing their results, the group also indicated with the chair saying the country's electricity shortage is untenable. What does this say for, not just this one particular company, but many companies that are faced with having to ramp up their generators and get backup power as a result of not having power? Just how unsustainable is this, especially in the long term?
So with load shedding, it definitely does impact everybody, not just us in our households. Going to the mall, when customers see that malls are dark, they are a bit unsettled to go to a dark mall. So you do see footfall reducing in those malls. And with the generator spend mostly falls on the pockets of the property market, so the owners of those stores. And that is a lot for them to take in, because it's not factored in the rental agreements. So it definitely is something that's impacting them. And you're also seeing it in the restaurant sector and the food sector. I mean, there was an article this week where one of the Woolworths had to remove all of their foods because the fridges weren't working due to the generator failing. So that's even food wastage, and that's also higher costs because they have to get rid of those foods. So it definitely is crippling our economy, and it does not look like it's going anywhere anytime soon.
Let's take a look at property group Fortress. They've lost their status as a real estate investment trust. How did that happen, and what does it mean for them moving forward?
So Fortress is a company that operates in the property retail and logistics property sector in South Africa, with some retail logistics operations in Europe. Now, what happened is that Fortress lost its REIT status, which is a real estate investment trust. It lost that status after a decision made by the JSE recently, which it tried to appeal. Now, what qualifies a company as a REIT is that they have to pay 75% minimum of their taxable income as dividends to its shareholders. Now, recently, Fortress has struggled to pay the minimum 75% within 4 months after its year end. And going forward, what's going to happen is that Fortress will be liable to pay tax, as since they aren't paying that minimum 75% dividends to their shareholders, they are liable for tax and will not be listed as will not be classified as a REIT on the JSE. They will still be listed though.
Bad news for some, but great news for others. You've got some very happy shareholders at African Bank. Why?
The African Bank, if you look at, they released the results last year, September, and in those results, you did see positive trading, and you saw they did announce that the group posted an 87% increase in the loans to its customers, and you saw higher transactions within its results. So it definitely is good signs for shareholders, as you are seeing stronger results, stronger operations, and these results don't even include the recent acquisition of Grindrod and the acquisition of the assets and liabilities of Ubank. So it definitely is good for shareholders that they are getting their returns as shareholders, and that decisions made by management are bearing fruit for the shareholders.
Equity analyst at Sentio Capital, Lesedi Mabuza. Thank you.